VeChain just flashed a signal that most traders are completely missing. While everyone's obsessing over Bitcoin's dance around $113,000, VET is quietly positioning for what could be the most predictable pump of 2025. I'm talking about a potential 33% surge that's backed by data, not hopium. But there's a catch, and it's bigger than you think. Let's cut through the noise and look at the numbers. VeChain is showing classic signs of life after weeks of sideways torture. We're seeing a 3.2% daily bump, 4% weekly gain, and a modest 2.2% climb over the past 2 weeks. Before you roll your eyes and call this another altcoin copium video, pump the brakes. CoinCodex data reveals the full story. VT is down 2.1% over the past month. That monthly red candle isn't weakness, it's compression. Think of it like a spring being wound tighter and tighter. The recent uptick isn't random market noise, it's institutional money quietly accumulating while retail traders are still nursing their September wounds. The crypto market cap just surged back to $4 trillion. That's not monopoly money flowing around. That's serious liquidity hunting for the next breakout star. Bitcoin reclaimed $113,000 like it was collecting rent money, and historically, when Bitcoin moves with conviction, altcoins like VeChain follow the momentum like heat-seeking missiles. But here's where it gets interesting. VeChain isn't just any altcoin riding Bitcoin's coattails. So, this is a supply chain blockchain with real-world adoption, partnerships with multinational corporations, and a track record of surviving multiple bear markets. When the tide rises, boats with strong fundamentals rise faster. Now, before you start planning your yacht purchase, we need to address the elephant-sized risk sitting in the room. September has been crypto's kryptonite historically. I'm talking about the month where portfolios go to die, where bull runs come to take a breather, and where even the most diamond-handed investors start questioning their life choices. But this September feels different. The Federal Reserve is practically telegraphing their next move like a bad poker player. Market analysts are putting 85% odds on a 25 basis point rate cut at the September meeting. Some are even whispering about a 50 basis point surprise, though that's probably wishful thinking from over-leveraged crypto bros. Lower interest rates are like steroids for risk assets. When borrowing becomes cheaper, institutional money doesn't park itself in savings accounts earning 4%. Alright, so here's the deal. The market is on the hunt for yield, whether it's in stocks, commodities, or yes, even cryptocurrency. And VeChain, well, it might just be in the perfect spot to ride this macro tailwind. Now, CoinCodex isn't just randomly picking numbers when they forecast VT hitting 3.2 cents by November 2nd, 2025. This target implies a 33.33% rally from where we are now. Plus the timing, it lines up with some potential catalysts that could really shake things up. So, let's talk about what needs to happen for VeChain to really take off. We're looking at a few key factors here. Fed rate cuts, Bitcoin's ongoing recovery, and VeChain's own technical setup, which traders are calling a golden cross scenario. But here's the kicker. Bitcoin has to stay above $110,000. If Bitcoin starts to falter, VeChain won't just follow it down, it'll drop even faster, kind of like a crypto influencer's credibility during a bear market. You see, altcoins are like leveraged bets on Bitcoin's momentum. They offer bigger gains when things are good, but also deeper losses when things go south. Now, we can't ignore the volatility factor here. We're still in a market environment where a single tweet from Elon Musk or a regulatory headline can send things swinging 10% in either direction. Sure, VeChain might have strong fundamentals, but those don't mean much when panic selling kicks in. So, let's dig into why this 3.2 cents target isn't just some YouTube thumbnail fantasy. It's a real possibility, but we have to understand the dynamics at play. VeChain's price action over the past 90 days shows a clear pattern of higher lows and compressed volatility. In technical analysis, this is called a coiling pattern, and it typically precedes significant moves in either direction. The recent 3.2% daily gain happened on above-average volume, indicating genuine buying interest rather than low-liquidity price manipulation. When altcoins move on volume during Bitcoin strength, it's often the first sign of broader market rotation into smaller cap crypto assets. VeChain's correlation with Bitcoin sits at approximately 0.78 over the past 30 days. This means when Bitcoin moves up 10%, VAT typically follows with a 7 to 8% move in the same direction. But here's the kicker. During sustained bull runs, this correlation often amplifies. A 15% Bitcoin rally could translate to a 20 to 25% VeChain pump. The institutional adoption narrative remains strong. VeChain's partnerships with BMW, Walmart China, and DNV GL aren't going anywhere. These aren't speculative partnerships announced via poorly formatted Medium articles. These are multi-year contracts with revenue streams and real-world utility. From a purely mathematical perspective, VeChain would need to sustain approximately 1.2% weekly gains over the next 10 months to reach 3.2 cents. In crypto terms, that's basically sideways price action with a slight upward bias. The question isn't whether VeChain can deliver 33% returns, it's whether the broader market will cooperate. The risk-reward setup looks compelling for patient investors. A break above 2.5 cents would likely trigger algorithmic buying from momentum traders, potentially accelerating the move toward 3.2 cents. Conversely, a breakdown below 0.022 would invalidate the bullish thesis and likely send VT back toward multi-month lows. VeChain's path to 0.032 isn't guaranteed, but it's not built on hopium either. We've got technical setups aligning with macro tailwinds and fundamental strength supporting the narrative. The September seasonality risk is real, but smart money often positions ahead of fourth-quarter rallies during these historically weak periods. So, if Bitcoin maintains its recovery above $110,000 and the Fed delivers expected rate cuts, VeChain could surprise a lot of skeptics. Just remember, 33% gains come with the possibility of 33% losses. Size your positions accordingly. Disclaimer. This content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments are highly speculative and volatile. You could lose some or all of your invested capital. Always conduct your own research and consult with qualified financial advisors before making investment decisions. Past performance does not guarantee future results.